Welcome, dear traders. Yesterday, the US revealed the GDP figures. The second quarter reading showed a 0.9% contraction in the annual terms after a 1.6% drop in the first quarter. Two consecutive quarters of a negative GDP usually signal a technical recession. However, despite the cooling of the US economy, analysts and policymakers are certain there is no recession in the country. On the contrary, some economists see the signs of economic expansion. Treasury Secretary Janet Yellen said that the U.S. has entered a new phase in our recovery focused on achieving steady, stable growth. She also added that there are some signs that inflation is likely to decline soon. Like the Fed chair, Yellen believes that the U.S. will avoid a recession thanks to a strong labor market. The slowdown in the U.S. economy is undeniable. However, judging by the economic indicators, a recession looks very unlikely, analysts at Wells Fargo stressed. Besides, a downturn is expected in 2023. As the rule, the National Bureau of Economic Analysis announces the start of a recession. According to the NBER's traditional definition of a recession, it's a significant decline in economic activity lasting more than a few months, usually reflecting in manufacturing output, employment, real household income, and other indicators. In his speech, Jerome Powell also mentioned these indicators and their impact on the Fed's further plans on the monetary policy. If they are positive, the Fed may slow down the pace of a monetary tightening. In addition, the hawkish stance has led to the slowing of economic growth, which may eventually help the Fed to curb inflation. However, recession fears its start could also force the regulator to switch to less aggressive tightening. So the US dollar is now facing strong bearing pressure after the release of a weak GDP data and the talks of a recession. It has been declining for the second week in a row. The greenback has moved away from the 20-year high of 109.30. It's trading today at the level of 105.98. In the Asian session, the US dollar was consolidating in the downward channel of 105.54 and 106.25. At the same time, the bias on the US dollar is still bullish as market participants continue to digest the Fed's key rate decision and Powell's comments. The regulator plans to keep fighting against inflation, even if it leads to a prolonged period of economic weakness and a deterioration of the labor market. The yen is extending gains amid the weakness of the US dollar. Japan unveiled upbeat economic data. Industrial output jumped by 8.9% after falling by 7.5% a month earlier. The indicator has risen for the first time since March, logging the quickest expansion pace on record. The Bank of Japan intends to stick to an ultra-soft monetary policy to keep inflation elevated. By this step, it wants to boost wages and consumer spending. According to the summary published today, the central bank assesses Japan's economy as stable and resilient. Several Bank of Japan officials delivered speeches in which they discussed the appropriate means for existing ultra-loose monetary policy. The yen rose instantly amid such comments. The regulator will hardly make any monetary changes in the near future. However, given the widening rate gap between the Fed and the Bank of Japan, the prospects of extending dovish monetary policy boosted the yen. The Japanese currency is strongly correlated with the movement of the US Treasury bond yields. So, it's also strengthening today following the fall. The yen advanced to a 6-week high of 133 and trading on Friday at 132.90. Following the sharp fall of the US dollar, the pace is steadily moving to the lower border of the price range of 132.48 and 134.67. The Aussie also took advantage of a decline in the greenback. Today, it surpassed yesterday's high of 0.7013, aiming at 0.7030, yet it retreated again to 0.7000. On the Asian session, the AUD-USD pair was rather volatile, fluctuating between its highest and lowest levels. It was moving in the range of 0.6986 and 0.7033. So far, the upward momentum remains strong. The Aussie may also climb higher in anticipation of the Reserve Bank of Australia's interest rate decision, which will be announced on August 2. And that's all for now. Subscribe to our channel and stay up to date with the latest market news. You are also welcome to leave comments down below. The next video review from InstaForex TV will be ready in a few hours. See you soon.